more of our summer of alternative financing this week. We're going to be talking about credit cards and some of the new features that credit cards are offering and how they might be used to help you build up that down payment.
I'm David C. Barnett, and you're tuned in to Small Business and Deal Making, the podcast, YouTube channel, and blog where I talk about buying, selling, financing, and managing small and medium-sized businesses while controlling risk. So if you're looking to take control of your future through buying a business one day, or if you already own a business and you're looking to grow or exit, you've come to the right place. I talk about interesting things, I talk to interesting people, and I answer your questions every week right here. So be sure to hit like and be sure to hit subscribe, and let's get to it.
All right, welcome back. And so for those of you just joining us new, we're doing a whole summer series about alternative financing, inspired by Neil from Twitter, who asked me to do some videos about alternative financing. And what the framework that I'm putting this in is how to buy a business without using a bank. And if you watch the very first video in this mini series, I talk about seller financing and how the size of the down payment is really important. And so a lot of these other subsequent videos are talking about ways that you can raise that down payment in order to entice a seller to be willing to carry back maybe a larger than average size seller note. And so over on Twitter, if you want to join me, my handle is at dbarnettmoncton. And if you just search David Barnett, small business, I'm sure you'll find me. And it's summertime, so I'm probably out hiking somewhere exciting by a rugged cliffside or whatever. And I share some of those pictures on Twitter and on Instagram, and my Instagram handle is the same. So if you're on those platforms, come and join me over there. Today we're talking credit cards, and I want to break this discussion into two different categories because really there's a traditional way that you can use credit cards to finance a business, and there's the newer kind of non-traditional way. And just like the conversation that I had about supplier financing, you can use credit cards as part of the operating capital needs of a business, and you can also use them to raise the down payment that you're going to need to make the acquisition. And I'm going to also share a story of how you can kind of do both. All right. So let me give you an example. If you have a business with a lot of inventory throughput, so a retail business that's buying a lot every month and they're selling stuff off shelves, and there's a lot of turnover of this inventory every month, then one of the questions you want to ask when you're examining that business is, how are the suppliers paid? And is it something that you can pay with a credit card? So for example, if it's a bar buying liquor, then you might be able to pay with a credit card to your liquor distributor, for example. Okay. And so when you make the business acquisition and you're looking at the down payment you're going to provide to that seller, if that seller owes money to suppliers at the moment the business is sold, what they're going to do is they're going to take the money at closing. If it's an asset sale, they're going to take the money at closing and they're going to go pay off their suppliers, right? And if those suppliers will take credit cards, then why don't you just pay them? So let me tell you a story of actually doing this. So I had a business transaction. It was for a small retail store, and I believe the transaction price was about 140 or 50,000, and the buyer was going to pay 100,000 on closing, and then there was a seller note for the other 50 over a few years. And so before the sale happened, the buyer said to the seller, "Look, a couple of weeks earlier, stop paying your suppliers. Let your bills pile up, and let's meet the morning before the transaction, and I will pay those people." So what they did is they met that morning, and the seller brought a whole stack of these invoices that had to be paid. And together they called the suppliers, and the buyer put all those transactions on his own credit card. And now you're talking about someone with a very high credit card limit. So they were able to pay like $70,000 or $80,000 worth of bills on the credit card. And then he just had to go get a bank draft for the balance to get up to that $100,000 amount. Now, you might be thinking credit cards are a very expensive way to finance a business, and you should get your hands on a copy of this book, Credit Card Advantage, if you're going to be in business and you're going to use credit cards. It's like $10 on Kindle. There's an audio version, and it is available in paperback. But I basically describe how a business can achieve strategic goals through using credit cards. And so when you make purchases on a credit card, you have until the end of your statement period, your billing, your usage period, then you get the bill, then you have a grace period, 21 or 30 days, depending on what kind of card you have. And so what that means is if the business has a lot of inventory that's selling every day, you can sell that inventory and raise the money to pay the credit card bill before any interest is charged. And in that way, you can simply revolve the credit card balances and you never end up paying it off and you never end up paying interest on it, right? How does a credit card make money? Well, through the merchant discount. We're going to talk about that a little more here in the second part. So you can actually create part of the down payment by assuming or covering or satisfying the payables of the business with your own credit card tools that you have. And again, this is not for broke people, okay? This is for people who have money, have resources, have good credit, so that they've got access to credit cards that have these higher balances, and yes, there are people out there walking around with credit card room that is 50, 60, $100,000. So this is one way you can do it, through paying off payables. Now, what is the other way to do it? So I've noticed since the beginning of the Rona crisis back in 2020, and maybe some of this started just before, let's call it part of the innovation in credit cards, is a lot of the credit card companies have started to offer term loans. I've talked about this before in some of my live casts, that American Express has been sending me solicitations because I've been using a Business Amex product for quite a few years, basically offering me these loans. And it's not at credit card interest rates. It's at much more reasonable rates, like 7.9, 8.9, 9.9% interest rates. But they have pretty short amortizations. So the Amex example, they're offering up to 24 months of amortization. And so you could take a loan and then use that money as the down payment. The problem being that with such a short amortization, the debt service would be huge. So who could take advantage of one of these short-term financings? Well, it would be someone who doesn't need to draw an income out of the business. So again, this is a strategy, particularly if you're buying a business while keeping your job, or if you're already in business and you're doing a strategic acquisition to buy another business, and your bills are being paid out of the cash flow of your initial business or your job, right? And so then you can commit more of the cash flow of the business you're acquiring to paying off that short-term financing. Now, another credit card that I have, and I don't carry balances on my credit cards, so maybe this is why some of these things are being offered to me. Another credit card I have, a MasterCard, recently started to promote these installment loan options. And it's kind of like a loan product within the envelope of the credit card's credit limit. And so what they were telling me was, hey, you can select certain transactions and we will break those down over a number of months, 3, 6, or 12 months. So again, short amortization, but we'll let you pay that off with a very low interest rate. So being somebody who comments on financing and all this kind of stuff for you guys, I decided to do it because I had to take my car in for some work, and it ended up being $1,500. And I thought, oh, I'm going to try that installment loan thing. So when I went into my app for my credit card, it came up as an eligible purchase. So I tapped on it and it said, do you want to pay this over 3, 6, or 12 months? And the 3-month option said that they would charge me 2.9% interest or something like that. So a $1,500 car repair, they basically break it into 3 $500 installments that become part of my minimum payment on those credit card statements. And the total interest charge was like $6 and change. So I was like, I'm going to do this because I want to try it out. And it's working just the way they said. So that then leads me to think, how could someone who's trying to buy a business use this particular technique? Well, a lot of small business sales are asset sales, meaning that the legal entity which is operating the business today is the seller, right? And you're buying the assets of that business from that other entity. You're creating your own entity. That other entity, if it's a business that accepts credit cards, they've got a credit card terminal. So you could actually say, again, if you have a high enough credit card limit, you could actually say, Mr. Seller, I'll pay you a down payment of $100,000 and I'll bring you $50,000 in, a bank draft or, certified check, and I'll let you charge my credit card another 50,000. Now they're going to know that they face a merchant discount on that $50,000 transaction. They might not care. They might build that into the overall pricing of the business. But you could let them swipe your card for $50,000. Then you could go and use one of these installment programs to lock in a lower interest rate and pay it over 12 months. Now, again, if you're putting a large amount of money over a short amortization, then you're going to face a huge cash flow burden in the business. And this really only works if you don't need to take a paycheck out of the business. Or, well, I guess if your spouse is willing to float the household bills or something like that, you might be able to use this kind of technique. The other problem with this kind of technique is what happens if there's a hiccup or a downfall in the revenues or profitability of the business. Well, now you owe the money to somebody who, if you don't follow the exact terms and conditions that you've agreed to, will suddenly move that debt into like a 23% interest category. And now you're swimming against the current. Now you've got a huge burden that could drown you, basically. And so those are the risks of using this kind of technique. Again, who would I recommend should do that? I would actually recommend someone should do that who doesn't need to do it. Somebody who actually has the cash and they say, oh, you know what? I'm going to do this so that I can rack up a bunch of airline points on my credit card, see if the seller will accept that. And if I get into trouble, I've got the money anyway, right? And so again, a lot of these alternative financing strategies, they may be promoted by other people as a way for you to somehow, maneuver into getting a business using, no resources, especially if you don't have any resources. But I would argue that if you're broke, these are very, very dangerous because you could easily end up getting yourself into trouble where suddenly you violated one of the terms and conditions of that installment program. And then suddenly you're paying a very high rate of interest on the entire outstanding sum. So those are just some ways that you can use credit cards in order to help you get the down payment or the operating capital when acquiring a business, or a combination of both if you're going to pay off the seller's payables in order to help make that initial transaction. I hope you're finding this stuff useful. If you've got any experience with this or stories you want to share, good or bad, I love it when people share bad stories. People would get, there are lots of people who've gotten into trouble with credit cards in business before. Very few people are willing to actually share their experiences and their warnings for other people. And so if this is something that you've been involved with and it's had a bad outcome in particular, please put it in the comments down below. Because if there's one thing this channel is about, it's about transparency and learning and warnings about what can happen. It's not just about what I call empty-headed cheerleading, rah, 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 you can do it, burn the bridges, let's move full speed ahead. Because one of the biggest aspects about being successful in business is not screwing up. Okay, remember that. Anyway, thanks for joining me. I love you all very much. I hope you're having a great summer. And don't forget, if you're serious about buying a business one day, then you should head over to businessbuyeradvantage.com, where you can sign up for my online course. It'll take you through the whole process. I'm constantly adding new material in there. One of the latest additions in 2022 is a new module on the introduction to financial statements. And I've got more planned upcoming. It's going to keep growing over time. You pay once, you have lifetime access. There's been a bunch of new modules added since 2019. Buying a business in a recession and all kinds of other good stuff. Anyway, we'll see you later. Talk soon. So how can you learn more about buying, selling, financing, and managing small and medium-sized businesses? Easy. Head over to my blog site, davidcbarnett.com, where you can learn more about me and how I work with my clients. You can learn more about my books and the online courses that I've prepared for you. You can find out about how to subscribe to my email list, the YouTube playlists, etc. There's literally hundreds of hours of content there, all for free, and I'd love for you to be my guest. Special thanks go out to Jeff Alpaugh Customs for being my tailor. Men all around the world can look dangerous, just like me, with the help of Jeff Alpaugh Customs. jeffalpod.com. Use the code DCB10 to save. They handle multiple currencies and ship anywhere you happen to be.